Hi, everyone. Welcome to the 128th episode of the Timing Research Show for March 6, 2017. My name is David Kosmeter. I am the creator of Timing Research, and today we will be talking about the 180th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com and you can download this report, or if you go to the reports page, you can download any of the past reports there. I have Hanna back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Good to be back. It looks like I am the only one showing themselves today. So I feel a little naked, but I'm looking forward to doing the show again. I got Jim Kenney here, Simon Klein, and Fausto. I mess up your name all the time. Fausto, the Pugliese. Pugliese, help me. Or is Fausto not with us yet?
Yeah, he's not here yet. It's Pugliese, I think.
Okay.
Yeah.
All right. Sorry. So right now it's just Jim and Simon and I. Why don't we go around and I'll let you introduce yourselves quickly and tell us just a little bit about yourself before we get into the questions. And Simon, you get to go first since you're higher on my list of what I wrote down here.
Okay, Rob. Thanks, David, for having me again on the show. It's great to be here. Welcome, everyone. So my name's Simon Klein. I'm a professional trader. I've been trading professionally for about 12 years, just over, and training people as well. My website, tradesmartforex.com, even though it's not solely Forex, I couldn't get the TradeSmart because it was taken by someone else. I went with the forex.com. So what we do is we take people from complete beginners all the way through to professional trader by teaching them firstly how to read the market using price alone. And then we teach them how to run a trading business. And then what we do uniquely to most other people in the industry is we work one-on-one with each of our traders to help develop a trading plan that fits them, their personality, and their lifestyle. So the trading plan with a strategy, at least one strategy in it, is tailor-made to them. I firmly believe that you cannot trade someone else's strategy unless you make it your own first. So what we do is we empower the traders that we train to actually develop their own strategies from scratch and go through the process of actually developing them, testing them, and deploying them in the live market and proving to themselves that they actually have a positive expectancy and will make money over time. So that's our contribution to the trading world.
All right, thanks, Simon. Good to get to talk to you again. Jim, can you tell us a little bit about Options Professor and
Sure.
your work there and
anything else I have on my mind, right?
Yes, whatever you want to talk about.
Anyway, with Option Professor, it's a firm that is educating investors on the uses and risks of a whole bunch of different option strategies. Some are used for cash flow creating, income creating type strategies. Others are used for limited risk speculation, and others are used for hedging, where you're trying to have a position that might offset some of the risk that you're taking somewhere else. And the goal is to make sure the investors have a good working knowledge of the different strategies, because there's so many out there. And then they can take that knowledge among the other knowledge they have and try to employ it on situations and circumstances that come up. But there are a lot of different moving parts and options, and they're certainly not right for everybody, nor is one strategy right for everybody. So it's very important to know as much about all the strategies so that you can have a base knowledge of how to employ which one at which time. So, they have 7 on the Option Professor. There's 7 DVDs, and I did provide the content for them. And I think they're very helpful for people who, want to get up to speed or renew their knowledge on option trading.
All right, great, Jim. Thanks for that. Fausto, I see you. You joined us here. Fausto from Cyber Trading University. You will be punished. 50 lashes with a wet noodle for being late here. But I will let you talk anyway.
You know, it is. I think everyone could actually probably agree with me, but sometimes you just have too many damn passwords and too many accounts, and it's just like I just went through. I have like an Excel spreadsheet. I'm like, why do I have 150 accounts with, like, if it's Google, if it's Westia, CRMs, emails. It's unbelievable. But how's it going, everybody?
It's going good. We're just getting going here with the introduction, so you didn't miss much. Just learning about Jim and Simon, pretty much. So why don't you introduce yourself and tell people a little bit about cyber trading?
Sure, no problem, everyone. So welcome, everyone. It's always great to be here on Timing Research again. And I'm the president and founder of Cyber Trading University. And we are a school that does mainly strictly on online courses, teaching people how to swing trade, day trade, do options trading. I've been doing this for it's going to be close to 25 years now. Just came back from Florida, did an event teaching NFL players now how to actually learn how to trade. And just at the New York Expo, did a big event over there. Great crowd. Looks like more and more people are looking to learn. Did an event. There was over 450 people in that boardroom. It's just, it looks like a lot of people are starting to realize the opportunity out there, taking matters in their own hands. And I just love what I do. Just finished trading this morning, and that's how I got into the business. Is that trading is a part-time job, and been doing it ever since. So look forward to being here.
All right, great. I guess before we get into the questions, I didn't tell anybody anything about me. I'm Rob Hanna, and I'm with Investaquant.com. We do automated trading. We do quantitative analysis for intraday, overnight, and swing time frames. And I'm the swing guy there. I also do overnight. I'm not as involved with the intraday, although I have taken on some research in that area as well. So that's my role with InvestQuant. You might also know me from Quantifiable Edges, where I have published that blog and newsletter since 2008 now. So it's been a long time, and I'm looking a lot older than I was then. That said, let's get into the questions. I'll go top to bottom again, but now Fausto is at the top of my list, so I'll mix it up a little bit here. We're basically just looking for your guess on your educated guess on what direction you think the S&P 100 is going to move today, or from today's open to Friday's close.
Well, I mean, obviously you've noticed the Trump bump. We've been talking a lot about it since we've been here. Since November, I think a lot of us actually predicted the market was going to go a lot higher. But now you're seeing all the stuff that's coming out recently, and a lot of executive orders are coming out. Obviously, it's affecting it. The market's been trending down. I probably think it's going to come down a little bit, not too much. You got some major support levels that are coming up where we're at right here. So I probably think we're going to probably go down just a little bit. You're going to have some profit taking going on. And I think this is the first time I've ever made that predicament. Obviously, on the show, I always thought we were going to go higher. But, seeing how the trend, how much money's been being made recently, I see a lot of profit taking going on right now. So I think we're going to, and then now that they're supposed to be coming out with the whole announcement regarding the whole Obamacare stuff like that. So they're probably going to see maybe a little bit of a downtick here. But overall, long term, higher, but short term, I think we're going to be down. Okay.
All right. Interesting. Simon, let's go to you. Oh, I'm sorry. Fausto, can you, I guess we're supposed to do a confidence rating. So on a scale of 1 to 10 or 1 to 100, what's your confidence in it going down this week? What would you say?
Probably 6.
Okay. And that's out of a 10, not 100,
out of a
right?
10. 100 would be nice, right?
6 out of 100 is not giving us much. All right. So, all right. Thank you. So we got one bear so far, and I'll bet we get a bull before we get to the end. So this will be good. We'll have some stuff to argue about. Simon, what are you thinking for this week?
Okay.
Going up or down from today's open till Friday's close?
Okay, you can see my screen.
Yep.
Okay, so if we look on the daily chart, we're actually coming into a demand zone here. And I always think in conditional thinking, because that way you don't really need to know what the market is going to do. You only need to know what you're going to do. But to answer the question, if we hold this level, we're going to see us moving up and maybe making new highs if we are able to go above here. If we don't hold this level, then I'll say we're going down. So it's all about what's happening here right now. We're in a demand zone here. If this level holds, we may move up again. If we move up and don't go above the highs, we may come back down again. If we don't hold this level, we're going down. That's how I think. So at the moment, we're down on the week slightly. It looks like we're pushing off from this level again. So again, we'll have to see how the market plays out.
Okay, it doesn't sound like you're. You got to pick a direction here. If we go up, we go up. If we go down, we go down. It's not really.
I'd say at the moment 50-50.
Okay.
50-50. We'll see how this move up goes. We could
Okay.
at the moment we're still uptrending on the bigger time frames, but we've had quite a number of weeks up. And we look at the bar here on the weekly chart, showing some signs of selling.
Okay.
A little bit. So we could move down. I would say maybe slightly more on the potential for a pullback and a move down.
Okay, so neutral to slightly bearish, you're feeling?
Yeah.
Okay. All right. Jim, tell them why they're wrong.
Well, I tell you what, the market just pulled back and filled in a gap that was created last week. So that's all behind us now. And the two things that are concerning is the Russell being under 1400 and the transports being under 9500. But this market has upside bias, so I am going to say it's going to go back up. It's about 8% or so above its 200-day average now. I'm trying to see if we can get up towards that 13% above the 200-day average on the S&P. So that's why I'm thinking there could be more action before it's done. And so this area here with the gap being filled might be an area where it can bounce up between now and the end of the week. And, if the unemployment report and other reports that come out this week, are fairly positive, maybe we can get this selling to turn around by the end of the week. Confidence level would be about 6.
Okay. All right, I'm with you here. I'm looking at an up week myself, and my confidence level is just about a 6 as well. I'm seeing maybe I could bump it to a 7. I'm seeing, based on the InvestaQuant 5-day quantitative odds, about a 60% chance of a rise in the market, depending on what you're defining the market as, being the SPY. We're looking at S&P here, so S&P is right around 60%. So I'm with you there. And again, 60 to 70% confidence for me. So why don't we go in and let's talk a little bit more detail about why we're thinking up or down, what might impact the trades this week. And I don't know, Fausto, or maybe we'll go in reverse order. Jim, would you like to touch base on that at all?
Yeah.
Like where are you seeing possible?
Well, as I look through the calendar off of Bloomberg, as far as what's coming up, tomorrow we got consumer credit, so obviously people like to see how the consumer's doing. Wednesday we have the petroleum status report on the inventories, ADP unemployment numbers, and wholesale trade, mortgages, and the 10-year auction. So there's some action there. Thursday you've got import-export, so that's going to tell you a little bit about inflation. And they got on Thursday a couple of things that nobody ever watches anymore that they used to watch like a hawk, which is the Fed balance sheet and money supply. But in the new quantitative world, they don't look at that much. And then, of course, Friday, you got your big unemployment report and you got the rig count from Baker Hughes. So the oil people obviously will be keeping an eye on that. We've been going up because people are just on the train of tax cuts are coming, and dereg is coming, and infrastructure spending's coming, and the healthcare system's going to be fixed, and immigration's going to get all balanced out. So they're all on the come line, and they remain on the come line. And why wouldn't you? Because if tax rates go from 35% to 15%, that wouldn't be negative for companies, right? And if school's out on regulations on banks, that's certainly not going to be negative for banks. And if rates go up, like the Fed's talking, that means more profits for the banks. So, you're stepping in front of that freight train has been very, very foolish. Having said that, the trees don't grow to the sky, as the Germans have that phrase, right? I don't know what the phrase is, but I heard there's a German phrase out there for it. And and we're also at the end of the seasonality, if you believe in the seasonality that starts around October, November, and ends around March or April. And the sell in May and go away is not getting further away, it's getting closer. So there's a lot of stuff out there. There's a lot of stuff out there in the next 4 to 8 weeks. But right now, which is what we're talking about, the market still has the influx coming in. And they don't seem to be tremendously interested in getting off the train right now. So that's basically, like I said, the Russell being under 1,400, the transport under 9,500 is not a constructive thing.
Okay.
So
their potential.
Yeah, because they were big leaders.
Here.
The Russell was a huge leader on the rally, right? The secondary stocks really took off like a lot. And I'm looking at Apple being 26% above its 200-day average. I'm looking at JP Morgan being 26 above its 200-day average. And, although, none of these things are an exact science, you're not crazy to say that it's a little bit extended.
Right. Okay.
Having said that, it's been extended for quite a long time.
Yeah. Since the election, right?
Yeah, last time I was here, we were talking about, how it could be extended and how you might want to sell it, but, because it's overbought. But I reminded people that it's overbought for a reason, and that's because it's very, very strong.
Right. All right. Thank you, Jim. Simon, I'm guessing you're going to have more technical reasons rather than fundamental reasons. You seem to.
Yep, that's true.
Okay.
I used to look at the fundamentals and used to spend hours before trading equities every day looking at them. But after doing it for many years, I came to the conclusion that sometimes there was good news and whatever stock you were looking at went up, and sometimes it was good news and it went down. And likewise, sometimes it was bad news and it went up, and sometimes it was bad news and it went down. So I decided, okay, forget about looking at the fundamentals. Let's just see what money is doing, where's it going. And the charts don't lie. The charts tell you what's happening if you know how to read them, and they tell you where money is going. The footprints of money is in the charts once you know how to read them. So you can see my charts again, yeah?
Yep, I can see them again.
See? Okay, so the market can continue, this move up can continue. I mean, it's not getting too extended. But one thing that's interesting, I'm just going to make this bigger to look at. I don't really use indicators, but I find the CCI very useful sometimes for looking at divergence. And you can see here the market made a high and the CCI made a high, but the market made a new high over here and the CCI made a lower high. This is divergence, this high with a lower high on the CCI. That's saying maybe we're going to get a pullback. That's not necessarily always the case, but it's just a warning sign that we may not hold this level. That being said, looking at this, I mean, this is a level of demand. We pull back and we could very well go higher from here. So it's just about waiting to see how the market wants to play out.
All right. Are you looking at any other indices that's confirming what you're seeing there in the S&P?
I'm looking here at the this is the E-mini futures.
You got a lot of charts up there. I can't make them out. That's why I'm asking that question. Or
the other charts here. Oh, right. Yeah. So this is.
Are they different time frames or
different time frames from the monthly, weekly, daily, 4 hour, and then down to the lower time frames. So on the monthly chart, it could still keep going. It hasn't really doesn't look like it's overextended itself too much. I mean, this sort of move can carry on forever, and then we get very choppy here. This move's getting a bit more steeper, but if you look at from here, it's kind of looks like a steady climb. this is just a breakout from this, sideways basey area, and probably on, this happened on Trump, yeah. But it doesn't matter the reason why it happened. It happened, and we have to see if this level can hold. If it can hold, the market's going to go to new highs, and we may look back at this area like one of the areas, further down, like down here, and and say, well, we thought it was going down, and it just continued going higher. So again, this is not the, you can't really sell in this area, and buying here, you've got how to manage your risk. If you wanted to buy here, you can manage your risk by putting, and the upside, who knows? There's no previous level to where it could possibly move. We're making all-time highs. So, upside potential is there if it continues to go, and your downside risk is known. So you can put a trade on potentially here, but we are quite high up on the curve.
Yeah.
After quite a number of weeks, and the markets don't usually keep going in the same direction without having a little bit of profit taking going on if it's going to continue moving up. It doesn't look like a top quite yet.
Yeah, I'll agree with that. It's and what you're saying with regards to it, it's been persistently moving higher over the last few weeks without any kind of a pullback. And actually, it's been a fairly remarkable long time, especially for the NASDAQ. Like the S&P, looking at an indicator I look at sometimes, the S&P is now closed 21 days in a row, 10-day moving average. So it hasn't even had a pullback and a close below its 10-day moving average in a month. And the NASDAQ right now is at 42 days in a row that it has closed above its 10-day moving average. Now, if they sell off a bit more today, then that could, break the streaks. But it's basically been 2 months since the NASDAQ had a close below even its 10-day moving average, which isn't much of a pullback. I mean, it's not like it's closing at a 10-day low or something. So that's
it's hard to pick tops. You have to let the market tell you when it's a top. If we're at new time highs, as the market goes climactic, and that's kind of the last sort of sprint at the end of the marathon, and that puts in a top. When you have the final surge, this doesn't look like it because it's coming from a base. So it's a different. If it would this move up and then suddenly go vertical and parabolic, then that would usually put in the end of the move, but that doesn't look like it here.
Yeah, and I think more often than not, you end up getting the rounded tops than the V parabolic type things that then collapse the other way, especially after such a persistent move higher. It's been pushing higher for so long now that it's right. Everyone's going to give it up real fast.
I mean, it's like if we take a look at this chart and we look on a 4-hour chart, for example, just this example. So this is a steady sort of move up, and then we get this sort of on this time frame looking like a parabolic move, big bar up, and that kind of puts in the top for now. But could just be a pullback, and then we go higher. But you don't want to be buying up here after this sort of move.
Yep,
that's the sort of thing. So if it does that on the bigger time frames, then that may be putting in a either a pullback or a top. We don't know yet. The trend is still up on the bigger time frames from the monthly, weekly, daily. So, the trend is your friend until the end in the end,
That's right.
Don't fight the trend.
Yep. And don't fight the Fed. Let's go to Fausto.
Okay.
And Fausto, any more details you want to share on reasons you might think it's moving lower this week, or things that you're on the lookout for this week that could change that?
Well, the only thing I told you was, I guess you could probably see my screen a little bit, but just that we're probably having a little bit of a gap fill even on the Dow, because we had such a big move up right here on the Dow right there. So you got the support levels right here. When you break through a support level, I mean, next support levels is the previous resistance. So, if it could hold right here, I mean, obviously the S&P and all the other ones follow along. It's just that if you look at that chart, I mean, that is just a remarkable rally from last year, from February, and then look what happened into November, going from 15,000 to 1750, and then just how it just took off. So, you're going to have profit taking. Listen, I just, when I was at down in Florida, I did my speaking down there, and I was at the New York Expo, and seeing all the people out there. I mean, I've been seeing it. Surprising, I'm seeing a big comeback, even at the shows. When people start coming out, they're starting to drink the Kool-Aid. So it looks like more people are now starting to, they got to spend their money somewhere, right? I mean, they're going to want to do something. So a lot more people are starting to think, is it too late? They want to listen to the experts. What do you think? Should we jump in now? I just, I went out over, and and I don't like to do this, but I rarely ever call my mutual funds, because I obviously have to do with my IRAs and everything. I can't do it myself. I have to lock it in with them, and they said they're getting harassed left and right. People are sending money left and right. So but what the news that's coming out now you're seeing what happened what's going to happen the first 100 days. Let's see what happens with the Trump bump, because that's what it's really all about. It's all about the Trump bump. Pharmaceuticals is going to be about healthcare. It's going to be about military stocks and seeing the defense budget and all that. So, but until those things actually come out now we know they're coming. Until they actually come out, then we can go from there. But as of right now, I think you can get some profit taking. But it won't be there for long. AMD, also, I mean, you could see all these stocks are doing had these huge rallies, and regarding about technology and stuff like that. You saw Snap come out, Snapchat, the IPO. That was fun, but it's backing off. Can't believe these kids are billionaires right now in a day. 5 billion, right? My God, what are we doing at home, right? Everyone. Was it Snap? Was it SNOP? Was it SN? Was it?
I'm not sure. I haven't traded it yet.
Yeah, I haven't. SNAP. What am I calling it? SNAP. Yeah, it's just like it was a great fun ride right here. You could see it went from 24 all the way to 39. A lot of profit taking, but look, whatever goes up comes down. So,
right.
this is what makes the market so much fun. But we'll see what happens with the Trump bump going on for the next week or so.
Yeah, I mean, that'll be interesting too. We've had the long run up since the election. And like you're saying, in areas where we think we're going to have, where Trump's new policies are going to be helping out. I think we were discussing last time on the show that it's interesting that such a volatile personality for a president, and just the way he's gone about things is much different with the executive orders and all that. It hasn't translated into volatility in the market. And at some point, we're going to see volatility in the market again.
Well, I always say something, Rob. I tell everybody this. If you hated Obama or you loved Obama, if you hate Trump or you love Trump, we're all part of the same party. We're traders. And,
right.
If you totally disagree with Obama when he bailed out the banks, but as a trader, you would like popping champagne, like, oh my God, we're going to make a fortune.
Exactly.
If he gives all this money, these banks are going to take off. So what are you supposed to do? Let your personal political beliefs that, this is ridiculous. I would never, what he's doing is wrong. But as a trader, like, what are you kidding me? It's like the greatest thing as a trader, because you're going to make money. And same thing with the Trump effect. I know a lot of people, take things personal, and I don't like to talk about politics when it comes to trading, but you have to, because you see what the power of, like, if you hated Trump, right? And like, I can't, and I'll give you an example. Look what happened to Mark Cuban. The market's going to crash. If he shorted the market because he took his personal belief and didn't like it, he got destroyed. Actually, I think I talked about this last time. Who's the guy that the billionaire that can't stand Trump, that they said he's been funding a lot of these?
Soros
lost $1 billion in trading because he shorted the market. So there you go. So you can't you look at it, and you know what? I think he's still short. I mean, I don't know what the story is with him, but I know he's getting destroyed right now. But as a trader, you're like, you know what? You see what's going on, and so if he spends all this money on defense, what are you not going to do? You're going to short the defense stocks? That's a bad trade.
Right.
I'll take that side. So that's the way. I mean, so historically, just to everybody know here, is that you're in something. This happens every 8 years, and you're in something historic. Don't let your political beefs prevent you from not making money, because you're at a great pivotal point to make a lot of money in the market, and you got to be a little bit cautious. So I just want to throw that in there so I didn't take too much time.
Yeah, no worries. And I think, yeah, you're talking about happening every 8 years. And as far as presidential cycle analysis goes, the first year of a presidency is generally pretty bad. And the theory that I've heard behind that is that, in the first year they're enacting all these new policies, and the best way to get new policies across is to talk about, how bad the previous administration messed things up, and it creates a bit of a negative atmosphere. And it's not a Trump thing. It's any new president that comes into office is going to tell you, things are bad. This is how I'm going to fix it, and that's how you get people to buy in.
It's not even bad, Rob, or anything. It's more like they have a totally different agenda. That's what it is. It's a totally different agenda. And like with Dodd-Frank, stuff like that, like, well, how does that affect everyone else? And like, listen, we're all in the market. So we have to look at it where, think about it. Like if you heard that Trump comes out and says, I'm going to put these huge regulations on banks, they're not going to lend money unless they get 50 signatures, this and that. What are you going to do? You're going to go long the banks? You know what I mean? So, I mean, if that's his agenda, you're going to know as a trader, and you might agree as an individual, be like, that's great. It's great. These banks got to be held accountable. But as a trader, be like, oh my God, we got to short these stocks. They're going to get crushed. They're not going to make any money. And that's just the way it is, So that's where I think a lot of investors, traders make a very, very big, and that's my expertise. Not getting too extremely technical, but that's my expertise. So I look at it as a trader, because you see what these things are doing every day. I mean, the biggest joke of the day. You want to have a little funny pop quiz to tell everyone? Let's think of this. Where is Priceline trading right now?
I haven't looked at Priceline in a long time. Anybody want to jump in before I cheat and pull it off my chart? It is.
Look at Jim's expression on his face, everybody.
No, that's mine. It's sky high right now.
It's $1,700.
Yeah.
And people are like, what? Like, are you kidding me? Like, what the hell does that company do? It's more than Google. So anyway, that's when you realize that it doesn't matter what you know, just follow the money.
Yep. But the other thing that'll be interesting here is we've had this run up on anticipation of all these things happening, and when they do happen, we could get a little bit of the it might end up being a buy the rumor, sell the news thing, right? Where once the policies come through,
that's exactly what I'm saying. That's what's happening right now. Buy on rumors, sell on news. They're selling on news right now, and then when actually comes into fruition, then you got to buy it back. That's exactly what I'm saying.
All right. I don't think I gave my Let me just talk a little bit about what I was thinking as far as the market for this week, my reasons, and I'll tell you at InvestQuant we look at a few different things. Like I group things in. We look at system ensembles, and they look at different aspects of market conditions, and we look at acceleration, we look at momentum, we look at seasonality. And acceleration isn't saying much right now, but momentum is very strong, and our momentum systems are primarily saying things are good and continuing to look good. And seasonality for this week, the 5-day seasonality systems we're looking at, are also strong. So those were kind of the reasons behind my prediction. The other thing that's looking good this upcoming week is that once we get past Wednesday, we should get into a period where the Fed's system open market account is likely to expand over the following week. So the next few days, not so much. But then we should see a little bit of expansion starting Thursday, Friday, and into early next week. So that could help out a little bit of a wind at traders' backs as well. I do a lot of analysis with Fed flows as well in my own trading. All right, let's. Does anybody have anything else they want to add? I think I've been talking more than I maybe should. Does anybody want to jump in on any of the topics we were just discussing as far as strength of trend, Trump, or what have you, before we move on to question number 4? All right, let's go to question number 4 then, which is an interesting one. Probably, well, let's see what you guys have to say. I think this was asked primarily of more traders that were learning rather than 12-year vets and 15-year vets and whatever I wrote down here. But what trading related skills do you want to learn or improve on in 2017? And how are you planning on doing this, was the question. I haven't heard from Jim Kenney in a long time, so maybe I'll throw it to you, Jim.
Well, in the option area, the couple of things that are interesting to me right now would be the strategy of a strangle and another strategy called a collar. And the reason is my opinion, my feeling, which obviously is, my own, is that as long as we, hold up here pretty good here with the S&P, there's still the outside chance of going up towards that 2450 to 2500 area. And that would put the S&P about 13% above its 200-day average, which historically has not been a bad time to consider the concept of a pullback. And that's where the collar strategy could come in and let people stay in the market, but also have some hedge underneath the market in case school gets let out in the summertime. Because again, we are entering the last 4 to 8 weeks of this seasonal period where stocks are generally quite strong. And then there is a seasonality, not an exact science, but there's some seasonality that the May to October timeframe can be a little bit rougher, which might coincide with the concept of what? That we've all gone in there based on immigration, healthcare, infrastructure, tax reform, deregulation, repatriating money, sideline cash coming in, all the lovely news, right? And then maybe there'll be the 2 words that nobody really wants to hear, and that's reality check. And the likelihood of reality check hitting between the May to October timeframe, it might not be a bad time frame for it to hit. So the collar strategy would be something to know about and see if it might be appropriate. The second thing is range bound and the strangle idea. The stock market still has fairly low VIX numbers, right? And has for a long time. That can continue for a long period of time, which could take you up towards 2450, 2500 for all you know, or it also could cause the correction. Well, if the premiums as you price them out seem very reasonable and you take both sides of the market on a strangle, then if the market were to shoot way up or way down, you'd have something that could participate in it. And then, of course, a lot of the other markets that people might be looking at, the interest rate market, we're in a very tight 2.3 to 2.6 window on the 10-year note. Will that bust out? The dollar's been between 100 and 102. The gold's been between 1260 and 1200. Silver between 17 and 19. Oil between 52 and 55. Soybeans between 10 and 11. I consider those fairly range-bound markets, and that's what makes the concept of the strangle interesting. So my 2 cents would be not a bad time to investigate the uses and risks of strangles and also the uses and risks of the collars.
All right, great. Simon, what do you think? What trading-related skills do you want to learn or improve on in 2017? How are you planning on doing this?
Actually, I was in New York at the New York Traders Expo, and there seems to be a change in people, and people seem to be, as a whole, moving more towards options. That's the impression I got from that. And I'm getting a bit more interested in trading options, so that might be something I might incorporate into what I do. So it's something I might be thinking of taking on.
Okay, interesting. Fausto, how about you?
You know, it's so funny. It's the same thing I was going to say myself.
Oh, sure. You're stealing his answer.
Well, it's regarding the options, but to be a good one thing I've learned is that it goes both ways. Everybody wants to learn options, and you don't want to be a poor man being a rich man's game. 90% of options expire worthless, and that means the only guy that's making money with the option is the guy that's selling the option. To be a good options trader, you first have to learn how to trade the stock. If you're a good stock trader, then you'll learn how to hedge yourself towards the option. And one thing that I would like to learn a little bit more is that I'm looking at is because of the whole Trump effect thing, I'd like to learn a little bit more on the leaps, because I think that because of the short term of the market, buy on rumors, sell on news, and and I don't want to tie up a lot of my cash regarding certain swing trades and some day trades. But I think there would be, as much as a stock that I would like to own for the next year or two, because but I don't want to tie up all that cash. I might consider, I want to learn more about how I can hedge myself on certain leap trades and protect myself on those. So that's where I'm at regarding to my trades. So.
All right, great. I'll tell you where I'm at with some things. I've always enjoyed the research side of many of the strategies that I've incorporated over the years have been swing trades or stuff I don't have to look at the market during the day or much of the day. And so I spend a lot of my day doing research rather than monitoring the charts or looking for new trading opportunities. When I used to day trade, when I first started trading, I would spend most of my day looking at charts and looking for trading opportunities in fast-moving stocks or things like that. But now it's research, and it has been that for me since I don't know, the last 13 years or so. And what I'd like to do now is get more into automation of those strategies. Even though I do a lot of my trading in the morning and the afternoon, I've started doing some more that you can do intraday, and the automation of those strategies is something I've started to do, and it's something that I'll continue to look to do because it allows me to, trade my strategies without having to necessarily monitor them myself, super closely. You still want to make sure that, machine's on and you got an internet connection and stuff like that if the order isn't already at the broker. But along those lines, that's something I'm looking to do. I'm also looking to trade bonds a little bit more. I started trading bonds some just last year. And so I've been dedicating a little bit more of my research into that area. I've traded stocks from the beginning, and bond research, they're so liquid, they're so large, they're easy to get in and out of. So bonds is where I'm looking to do a little bit more for my own self.
Rob, do you feel on the bond market, which obviously turned over last summer, that there could be an extended play there? Or are you going to just look at it day to day, week to week type thing?
Yeah, so I think we expect rates are going to be going higher over time. It's not an extended play for me at this point. Most of my research is really short term, like one day or even from open to close type stuff. But I part of the reason I like the bond trading is, I've even started developing some strategies where I could get in around the 8:20 Eastern time open of the bonds and be done with that trade by the time the stock market opens at 9:30. So I look at it a little bit as a way to increase my capital turnover and be able to trade more efficiently. So not all of my bond strategies are like that, but that's one type of strategy that I've found appealing, that I'm looking to do more of.
Is there one vehicle that is liquid and you can use more than others? A lot of people use that TLT or LTL or.
Yeah, I was looking at. So I don't necessarily use the ETFs. They'll open at the same time as the stocks. I'm talking about futures. So I'd be trading bond futures.
Gotcha.
All right, we're getting near the end. Why don't we go through and I want to let everybody last words. Anything else you want to add? And then tell us if there's something going on at your site that people should be aware of, or how we can get a hold of you. And lastly, a trade idea for this week, if you have one, that would be very much appreciated by the people that have endured this entire program just to hear your trade idea at the end. So let's start with Fausto. I'll go top to bottom again. I think we just went up the last time.
Well, my trading idea, which I know everyone always looks at it. First of all, and also tell you a little about CTU, is that first of all, everyone here is invited to come and join us for joining my professional trading room. We have hundreds of traders in there. We have a trading room and a teaching room. So nobody thinks somebody makes money doing this. And nobody sees people losing money doing it. So come and join and see the traders in the room. Don't look at me, look at my instructors and look how well they're doing, and see if it's for you or not. Like everyone here, and I said it also at all the events I attend, the cheapest trade that you can make is not just listening, but seeing what it's like to be in a real market conditions and see if it's for you. So everyone here should learn a little bit about everyone's market, stocks, options, futures, Forex. And then if you're really happy with that the person's product, then move forward with the education, because if you think education is expensive, try ignorance. The trade of the day, or what we look at, what I always focus on, is keep an eye on the big percentage gainers and losers. Specifically, on the pharmaceutical side, on the military stock side, look as the Trump effect, Trump bump as an asset and a news feed for you to kind of trade with the market. We talked about this earlier. We saw what happened with all the shipping companies, and if you go back and you look at them, like dryers, stock went from $5 to $800. Now it's back down to $1. There's some great opportunities out there, and then you just got to be careful how to get out of them so you don't get caught. Once again, like we talked about, buying rumors, sell on news. So just focus on your big percentage gainers and losers. And if you see something in an industry that keeps popping up there's other stocks in that industry. If you miss that big bump, then look for another stock that's in that industry. But that's going to be my tip of the day. Just focus on the big percentage gainers and losers.
All right, great. Thanks, Fausto. It was nice getting to talk to you again. Always is.
Thanks for having me.
Simon, how about you? Anything else you want to tell us about TradeSmart Forex? And if you got a trading idea for us, that'd be awesome.
Okay, hi. Let me just share my screen again. Okay, so this is the website. You can go to TradeSmartForex.com. I put out once a week a video about where is the dollar going next. And again, it will analyze the levels, and I get great feedback from that. So you can start following that for free. And you can get that via my YouTube channel over here. And what I decided to do, and I usually do, is if you want to learn how to read the trend, and that's just using price alone, yeah, no moving averages or anything like that. If you want to learn when a trend begins and when a trend ends, so when you're looking at the charts, hey, this is the top now. The uptrend has come to an end, or this is where the downtrend begins. If you want to trade with the trend, or certainly not against the trend, then I recommend doing this. And what I'll do until March the 9th is put it on a special offer at $197 instead of $397. So anyone who wants to sign up for this can go to this URL over here, and I think David's going to put that on the YouTube video below. A trade idea. So I'm looking at the euro here, and this is all dependent on what's happening with the dollar. So if the dollar starts to sell off, this is gonna run to the upside. What we see here on the monthly chart, we see this has been basing. We see we actually went below the base and then immediately back into the base. If we look at the weekly chart, we've pulled back and we're holding this area. And we're going a bit sideways on the daily chart. So if we pull back a bit more, we could get some potential move to the upside here. We could potentially, I mean, this is a bigger picture view, and this could run up all the way up here, potentially. So that's dependent on what happens with the dollar. The euro most of the time works inverse to the dollar. So if you look at the dollar index futures, if they start selling off, this thing's going to run to the upside. So that's something to look at as a potential trade in the following weeks.
Okay, great. Thanks, Simon. Jim,
Sure.
tell us
Well,
what you want
you know,
to
I
tell
was-
us from Professor, and then how
Sure.
we can make money this week, I guess.
Yeah, well, one thing is I think we have to acknowledge that this is a very, very exciting time in the markets. I don't think anyone's really, fully grasped the idea that, since the election, we've come up about 20% on the S&P, which is probably one of the bigger moves it's had in that period of time, and I don't know, and even in history. Rob, would you say it's one of the bigger moves in history in the last 4 months from what you've...
By some metrics, it probably is. Yeah.
Like on the S&P anyway.
I don't know if the the size of the move has been great, but certainly the persistency of the move has been pretty incredible. Yeah, like we haven't had a down day of 1% or more since early October. I think it's been.
Right. So at any rate, the one more leg up, this is my guess. If we had another nice strong leg up towards that 2450, 2500 area, that could be, a good time to look at some strategies that would maybe indicate a correction might come afterwards. If you can get a formation up there where a high is surrounded by lower highs, and you get any other confirming factors that might happen. So that's pretty exciting. And, that can happen in the next month or so. So that'd be something to keep an eye on. And then the other thing is with regards to all these fairly tightly bound commodities where you also have volatility measurements pretty low. Investigating that collar strategy, how it works, what's the use, what's the risk of it, could be quite helpful. And of course, the collar strategy I mentioned is a way where you can stay with the market, but also have some floor underneath with the put option that gives you some some comfort. Because if we do get heavy deterioration in the transports and the Russell from here, going up to the next level might be a rough racket. So that's why, having a net underneath the relatively high wire here wouldn't be the worst thing in the world. So, as I say, Option Professor does have 7 DVDs that go over a lot of different strategies and give you the ins and outs of it. So you have a good working knowledge of it. And I would suggest people investigate getting some of the tapes so they could increase their awareness on how some of these tactics work.
All right, great. Thanks, Jim. I'll go last here, I guess. It's if you want to reach me, you can find me at rob@investaquant.com. I would encourage you to check out InvestaQuant. I would encourage you to check out Quantifiable Edges. And you can learn more about my work at both those sites. As far as trade ideas, I mentioned earlier that we've gone a long time without the spider or the QQQ or the futures associated with them, the other double and triple ETFs, whatever your preferred trade vehicle is. But spider and QQQ have gone 1 month and now 2 months in that order without closing below their 10-day moving average. While we may be reaching a top here, we may or may not, I don't think that top is likely to come immediately. It's rare that you see a persistent up move end abruptly. Normally you get some kind of give and take first. So based on that, I'd be looking to be a buyer if we get a close below the 10-day moving average this week. And I would be looking to hold on to that trade for somewhere between 2 and 5 days, depending on how long it takes to bounce and how good the bounce looks. If it got back up near a 10-day high, I'd be selling it again. So that's where I'd be looking to take a kind of a market swing trade if it became available. And I guess that's it for me. David, we didn't go extra time today.
Yeah, just under the hour here. So
Yeah, we're such efficient speakers.
Yeah.
Good thing you kicked that other guy off.
All right. Yeah. Thanks everyone. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button to make sure you get updates on future shows. Also, you can go to TimingResearch.com and download any of the past reports or watch any of the past shows there. Also, I've been posting all the recent shows in the audio in MP3 format. So if you want to listen to it like a podcast, download it to your phone and listen to it in the car or at the gym or whatever, you're welcome to do that now.
Wait, you mean I put on a collared shirt for this? And you're encouraging people to listen to it without looking at it?
Yeah, most people still watch it, but
Oh, okay. All right.
to just make that put that option out there for people. So
Where's the puppy?
Oh yeah, she's sleeping in the back now.
update on your dog every time.
Yeah, I'll have to bring her out for another show.
Well, be sure to join us next week, March 13th. Steve Lentz, Glenn Thompson, and Dave Landry will be on. And I just want to thank my guests again for this week. Fausto Pugliese of CyberTradingUniversity.com, Simon Klein of TradeSmartForex.com, Jim Kenney of OptionProfessor.com. Mark Dannenberg was supposed to be on today, but he had to cancel, so we'll try to have him on again in the future. And Rob Hanna of InvestaQuant.com. Thanks, everyone.
Thanks.
Thanks, David.